All right, what is up, boys and girls? Welcome back to another video, as always, on the V-shaped recovery pattern. You're here with me, Liquidity Supply and Demand. Thank you very much for joining me, as always, on the channel. Please do like and subscribe, leave a comment and all that good stuff. That helps out the channel immensely. Really appreciate your support. So I'm just going to go through my strategy that's been making me a ridiculous amount of money over the past 3 or 4 months. I've got a win rate of over 80%, which is absolutely crazy. And when you account for break evens as well, it's probably more like 90% with only a few losses. It's been absolutely insane, to be honest, with the model that I've been trading and the strategy that I've been trading, which is the V-shaped recovery strategy, which I've been trading on gold and also on US 500. Or if you're trading futures, you can also trade on NQ. As you can see here, NQ is also very, very possible. I can see some trade right now already, as you can see here. But basically what we're looking for is, I'll just do a quick rundown of the strategy. A very, very quick rundown. So say you've got your market structure like this, kind of going sideways or heading up in a certain way. And then what you're basically looking for is that V shape down, come down and sweep some liquidity to the low. This is what I'd be looking for here. You can see you've got your low here. You get that sweep and then you're looking for that V shape back to the upside. If I can stop my auto, there we go. You're looking for that V shape back to the upside and you're looking for an inverted fair value gap like this to get broken. This is the textbook setup that I'm always looking for, and I always enter once I see an inverted fair value gap and a lovely V shape back to the upside being broken. I'd enter on the fair value gap being broken. I have my stop loss, a manual stop loss below. If we close back below the fair value gap, I will close the position, and then I'll just be looking to target a 1-for-1. And then I'll be looking to send runners up to some of the liquidity targets above, say for example the next swing and then maybe the high of day as well. This is generally my strategy, and this has been getting me an absolute ton of success recently, to be honest. It's been pretty unreal how many times I've been getting winners, and at the very least break even, which is nice to see, rather than I've been trading previous strategies during this Trump period in the market, and I have to say it was pretty painful. So let's just take a look at US 500 then, see if we can find some trades. I can already potentially see a few trades here just from eyeballing the charts. So if we just take a look here, you can see we're going sideways. We've got a lovely, I mean, this was literally an hour ago. This would have been a good trade. I should have took this if I was on the charts, but I was not. But you can see we've provided some pretty clear swing points here that we can go and take liquidity from. You can see the liquidity was swept from below this one, and we've got an absolutely textbook, beautiful fair value gap. This is absolutely textbook stuff here, guys. On the 1 minute chart, you can see we've just come down, we've swept that liquidity, we're V-shaping back up, we've got that lovely inverted fair value gap, we've got a nice momentum back, swinging back to the upside after taking that liquidity. Very simply, I enter on the break of the candle, break of the inverted fair value gap, sorry, and as you can see, the candle closing above, so I'm taking that trade. My stop loss is down here below, and as you can see, after around 5 minutes or so, we came up and hit the take profit. Once I hit my 1R take profit, I do set my stop loss to break even, which would be meaning that I'd already taken 1R on this trade and I would have set my stop loss to break even. And then I could have targeted, as I said previously, these lovely additional liquidity points. And as you can see on the charts, this trade would have worked to absolute perfection. Unbelievable example straight away. This happened literally an hour before I recorded this video. And it's pretty much a textbook perfect example of exactly what I am looking for on the charts. And exactly what I just described to you. You've got your very, very obvious, on the 1 minute time frame here, very, very obvious high, low and high here where you can take liquidity from. And as you can see, we came down, we swept the low, we get the lovely inversion back to the upside after sweeping liquidity. Inverted fair value gap here. You can see closed above. So my 1R went to break even here. And then this would have ran for full take profit, maybe 3 or 4R if we're taking half off the position each time. Absolutely incredible trade, incredible example of what I've been looking for as well. I mean, this is absolute textbook, to be honest. Even with the low volume that you can see on this chart, you can see that this worked to absolute perfection. You would have ended up having a really, really nice trade here, up for 1 to 5, 1 to 6R if you held all the way to the swing high, which I don't recommend. That's not my model, but you can see just how well this works. Another example here, potentially, let's take a look. We have got a decent liquidity sweep here, I would say. I would probably take this if I saw this. You can see you've got some pretty clear high and low swing points. We come down, we sweep liquidity below, and then you're looking for your inverted fair value gaps here. You can see we've got a fairly big sequence of inverted fair value gaps here. In an instance like this, I would probably wait for another manipulation leg down, which is what you can see is what we got. And then we've got a nice little inverted fair value gap here. As you can see, the problem with this one is we came up and we ran so far up on the internal swing high. You can see this internal swing high here was already hit before we got the close for the fair value gap, which doesn't leave you with great targets, because obviously you could easily just come up into these fair value gaps here in this sequence. You can see there's multiple fair value gaps in a row. One here, one here, and one here. So you could easily run into any of these and get reversed on. So I wouldn't potentially take a trade like this unless we saw a much better entry point. If we were much more V-shaped, like without this area here, I probably would have took this and then targeted back up towards the top of the V. But as you can see, that one probably wasn't what I was looking for. This one here, however, might be a lot better. As you can see, we came down and we actually, I think we just swept below this previous low here. This might be equal lows, actually. I'm not entirely sure. They might be equal lows. Yeah, I mean, if this had swept the low, this would have been a good trade as well. You can see you've got your fair value gap here. You could have potentially taken this, although we did hit the swing high already. So this would have been a risky one as well, although it would have worked over time, as you can see, but it would have took a while. And with the equal lows below, it probably wouldn't have been a trade that I would have taken. We can go back through and look at a few more. We've got potentially one here as well. You can see how low the volume is, but it is obviously was a bank holiday yesterday, but you can see in this area here, we've obviously got some pretty key swing areas. If you look back across as well, we've taken quite a lot of liquidity to the left. We've got our lovely inverted fair value gap here. You can see once this gets closed above, you could take this trade here. And then you just aim for a 1-to-1. Obviously that would have got hit pretty quickly, gone break even, and then aim up for your swing high point. That would have got hit as well. So you can see the idea. These V-shapes happen all the time in the market, and generally speaking, they always tend to go, from what I've seen, at least for a 1R, if you take these ones that take a good sweep of liquidity. Even this one here could have been a potential trade. You could have took the first inverted fair value gap there, which would have technically probably been this candle. That would have gone for a 1R, as you can see. Just looking across here, I actually took this trade here. You can see I've got my executions on the chart, because we did have this really, really big move to the downside. And if you look at the 5-minute, I believe, was this it here? Yeah, we swept down below this previous major swing low here on the 5-minute. And I was thinking, okay, this looks pretty promising. So I went down to the 1-minute to look for an entry. And you can see I actually took this because the executions are on the chart. So I was looking for basically my first inverted fair value gap after this massive, massive move. I got into this a bit late because I only just saw it, but I should have got in here really. And if that was the case, I probably would have got 1R on this. Maybe just about before I got stopped at break even. But I went break even just because from intuition, you could tell that we were chopping sideways a lot here. And although this would have eventually gone and hit my target for a 1R, after back testing the inverted fair value gap here, as you can see, just with the momentum to the downside, I didn't want to stick in the trade for too long if we weren't going to get that textbook V-shaped recovery. You can see even the entry here, it did take a little while for this to play out. So I wasn't as sure about the entry. It wasn't like that true V-shape that you're really looking for in the on the charts. We also had one here, and it was a very similar story really. You can see we did get a nice sweep of liquidity to the left. We came down. I entered on the bounce. I was late to this one as well by about 5 minutes, as you can see. But I thought we might, because of how textbook this V-shape is and how quick it was, we might get at least a 1R back up into this area here, or back to the 50% area of this move down. But as you can see, we went sideways for a while on this one as well, and I got stopped at break even eventually once we started to swing up. So a few break even trades on this recently, but you can see just how well this strategy is looking. There's actually a trade here as well. Shall we just talk about this trade that is happening right now as I'm recording this video? So obviously you can take longs, but you can also take shorts on this strategy. And as you can see, we take a quick look if I can actually get my chart to function. So we've already took the low of this local area, and we've also got this swing high here. We come up and we've took liquidity above, haven't we? And what can you see here? There are actually some inverted fair value gaps to the downside here after sweeping liquidity. This might be, maybe there's a cleaner entry here on the 2-minute. Yeah, this 2 minute would probably be better. 3 minutes not looking clean. 5 minute. There is actually a really good 5 minute entry here. Look at this 5 minute. This would be happening in real time right now as well. You could take this 5 minute if you wanted to be safe. You can see we've obviously got a very clear range. We come up with sweep liquidity. We come back down. We close below the inverted fair value gap. You could have entered here. And you would have already hit your 1 for 1, as you can see. 1 for 1, and then you just go break even. And then you'd be looking to target down to the liquidity points down here. You've got 1 here. And then you probably just go down and target the low again. But as you can see, this trade literally happened in real time as I was talking about the strategy. Absolutely incredible strategy. Definitely something that you need to go and check out. I'll wrap it up here because I don't want to waffle on too long, but you can see, go and look at this for yourself. This is a really good potential strategy. Like and subscribe and leave a comment, and I'll catch you in the next video. Cheers.